Cathie Wood has been on a buying spree with one Chinese Tesla rival. What does this mean? Could it be that she's slowly transitioning to anti-Tesla stock? Well, let's find out. Cathie Wood's ARK Investment Management has further raised its exposure in the U.S.-listed Chinese electric vehicle maker XPeng, continuing its buying spree in the company that aims to rival Tesla. ARK Invest bought 31,178 shares, estimated to be worth $1.2 million in Guangzhou, China-based XPeng. We're going to look at the stocks Cathie Wood's ARK Invest currently owns and see how they're different from Tesla stock. Maybe then we'll know Cathie Wood's sentiment on Tesla stock. XPeng and other Chinese peer stocks such as NIO have been under pressure lately amid DD Global's plans to delist from the New York Stock Exchange. XPeng's homegrown Shanghai, China-based rival NIO also revealed a new sedan that would compete with the Tesla Model 3. XPeng delivered more electric vehicles than NIO and Li Auto in November. The company has said it aims to sell half of its electric vehicles outside of China. And the maker of electric sedans and SUVs already sells electric vehicles in Norway and plans to ramp up investments overseas in 2022, including Sweden, Denmark, and the Netherlands. ARK Autonomous Technology and Robotics ETF held 608,120 XPeng shares, which were worth $25.4 million prior to its recent trade. So what about ARK Invest's Tesla shares? Tesla is the only other all-electric company in which ARK Invest has exposure. The investment firm counts Tesla as its largest holding and owns shares worth billions in the company via its exchange-traded funds. What this means is that there are other stocks owned by ARK Invest. So before we talk about Tesla, let's look at these other stocks. Some of ARK Invest stocks to buy and watch are Block, Coinbase, DraftKings, Roku, Teladoc Health, and Zoom Video. As you can see, Cathie Wood's ARK Invest has a portfolio that's pretty much diversified. The ARK Investment Company's flagship fund is ARK Innovation ETF. The ARK ETF focuses on companies that exhibit disruptive innovation, a technologically enabled new product or service that potentially changes the way the world works. The ARK Innovation ETF surged more than 152% in 2020, handily beating the Nasdaq's hefty 43.6% return. But the ARK ETF is sharply underperforming the Nasdaq in 2021. Through December 23rd, the ARK was down 20.4% compared to the Nasdaq's 21.5% advance. Other ARK ETFs include autonomous technology and robotics, next-generation internet, genomic revolution, fintech innovation, and the recently debuted space exploration and innovation. In a nutshell, Cathie Wood seems to have invested in game changers. The ARK Fund's huge gain in 2020 resulted from big stock success stories in cutting-edge tech areas such as DNA sequencing, robotics, artificial intelligence, energy storage, and blockchain technology. Cathie Wood says that disruptive innovation is often not priced correctly by traditional investment strategies because people may not understand how big the ultimate opportunities are going to be. They aren't seizing the opportunity and they aren't analyzing the disruption. Amid the current stock market uptrend, investors should focus on buying top stocks breaking out past correct buy points. And Cathie Wood's ARK Invest portfolio gives investors an insight into the stocks to buy and watch. Let's start with Coinbase. What do we know? Cryptocurrency exchange Coinbase debuted on April 14th, pricing at $250 a share. Coinbase stock closed its first day of trading $328.28, which was up 31.3% for a valuation of $87.3 billion. Coinstock is trading about 42% off its post-IPO highs. In recent weeks, shares gave up the entirety of a big gain past the double bottom's $280.71 buy point following an October 15th breakout, triggering the key round-trip sell rule. Coin shares are sharply below their 50-day benchmark. The large stake in Coinbase represents another one of the ARK Invest stocks that offers more exposure to cryptocurrencies. Next, we have DraftKings stock. The latter is an online sports platform that allows users to play daily fantasy games and win cash prizes. The company is poised to take advantage of the expanding legalization of digital sports betting across the U.S. DraftKings stock remains below its key 50-day moving average and the long-term 200-day line. Shares are about 60% off their 52-week high. Now, what about Zoom Video stock? Zoom Video is the leader in modern enterprise video communications with a cloud platform for video and audio conferencing, chat, and webinars across mobile, desktop, and room systems. On November 23rd, Zoom tumbled after the company reported third quarter earnings and revenue that edged by estimates amid elevated turnover of small business customers. Zoom stock sold off as some analysts focus on slowing of billings growth. Shares are nearly 60% off their 52-week high. Well, let's move on to the next stock, Roku stock, and it's trading at more than 50% off its 52-week high amid sharp weakness in recent months. On December 8th, Alphabet and Roku entered their video streaming spat under a new multi-year distribution deal for the YouTube app and a separate YouTube TV app. Roku shares recently lost close to 1.6%. Now on to the next stock that forms part of ARK's Invest portfolio. Block is a digital payments and cryptocurrency leader. Block stock is more than 40% off its 52-week high and sharply below its 50-day and 200-day moving averages. According to IBD Stock Checkup, Block stock shows a 57 out of a perfect 99 IBD composite rating. The IBD composite rating helps investors easily measure the quality of a stock's fundamental and technical metrics. And finally, before we talk about ARK's Invest Tesla shares, let's briefly talk about Teladoc Health stock. This firm provides on-demand healthcare services, such as non-emergency online doctor's appointments. More doctors and patients are opting for telemedicine due to COVID-19. Teladoc is one of the biggest ARK Invest stocks with a nearly 6% portfolio weighting in the ARK portfolio. TDOC stock is trading at about 70% off its 52-week high. One thing that we've noticed is that most of these other stocks owned by ARK Invest have been on a downward trajectory, whereas Tesla has been rallying and advancing. Tesla stock is one of the top ARK Invest stocks with a whopping 7.75% weighting in the ARK ETF portfolio. In mid-January, ARK Invest unveiled its 2025 price target on Tesla stock of $3,000 a share. Shares are approaching a new buy point after bullishly reclaiming their 50-day moving average. The EV giant is an IBD leaderboard stock. Tesla stock reached a $1 trillion market cap in October after shares climbed on the back of record third-quarter deliveries and a large order from a rental company. That valuation dipped under $1 trillion as Musk sold more shares. The stock went down about 15% in December, but held on to its yearly gain and is up about 34% year-to-date. The billionaire entrepreneur has sold shares worth $13 billion to pay the taxes on the exercise of options that expire in 2022. This is what's confusing investors, coupled up with Cathie Wood's anti-Tesla activities. Cathie Wood's ARK Invest also sold shares in Tesla despite the stock's recent sluggishness. Cathie Wood, who is a Tesla Super Bowl, has sold shares worth over $1 billion in Tesla since September to book profit. In December alone, ARK Invest sold 393,556 shares in Tesla, a stock that continues to be its largest bet. The popular money manager has been for years piling up shares in the electric vehicle company at far lower levels. And remember, this is a stock that it predicted would hit the $3,000 mark by the end of 2025. Wood is known to not be hesitant in booking profits in favorite stocks when they run up significantly and seek to buy back again at lower levels. So is Cathie Wood trying to show us that it's time for investors to sell their Tesla shares? Tesla continues to be on the growth path and is racing to end the year building nearly 500,000 electric vehicles in China, which is its second largest market outside the U.S. That's almost as many as it sold globally last year. Whether Cathie Wood's actions are pointing towards a bear or bull shouldn't be a major point of focus. Investors will have to monitor the situation as it unfolds. Let us know what you think via the comments section. Thanks once again for tuning in, and don't forget to like, share, and subscribe. See you next time.